Okay, we're now on to the next part where we're starting to talk about one more item in the Schedule A, and that is charitable contributions. And this one has actually changed a little bit for 2020. So, when we talk about charitable contributions, again, they can be deducted. Doesn't matter if it's cash or property. We do have to know this, though, is that the value of free use of taxpayers' property by the charitable organization is not deductible. We do not have to know that. But again, we do have out-of-pocket expenses related to qualified charitable expense activities are deductible. Not, and there is some exceptions we'll get into. Mileage deductions, though, for this year is currently set at 14 cents per mile. And that is really good if you're volunteering for something, not actually driving to the donation place. Now, to be deductible, this is the key, because there's a lot of places we can go and donate money. But to be deductible on the tax return, the donation must be made to a qualified recipient, such as the United States, a state, or political subdivision thereof, if the donation is made for exclusively public purposes. 2. A domestic organization formed and operating exclusively for charitable, religious, education, scientific, or literary purposes, or for the prevention of cruelty to children or animals. And again, these are all, they're usually classified as 501Cs. But number 3, of course, churches, synagogues, and any other religious organizations. We can basically deduct any thing that we paid to them. War veterans organizations, civil defense organizations, and fraternal societies operating under the large system. Now, only if contribution is used for one or more of the charitable purposes listed in 2 above. So again, the whole list. But that includes the Lions Club, the Rotary Club, the Shriners. All those actually operate under a lodge system. And then, of course, certain non-profit cemetery companies. Now, there's that Kickstarter. It's not one of them. They're not going to be considered really a charitable case unless it's a fine line on that. IRS really does have a fine line on like anything that's like Kickstarter or any of those other self starting ones that people will say donate money to this. So big thing is if the company is a 501c, then yeah, you know you're covered and you can make it deductible. So, following contributions are not deductible. They never will be. Be gifts to non-qualified recipients, e.g. needy individuals. That's where Kickstarter comes in. Labor unions, political parties. Never be. Contributions of time, service, the use of property, or blood. Those are not considered ones that we can deduct. Contributions where benefit is received from contribution. This is always the fun ones because we always hear those silent auctions go off and stuff like that, where we actually contribute so much money to win an item Well, we have to take the value of that item against what you actually bid for. So if your bid was less than the value's item, there's nothing to deduct. But if it's more, then we get the excess. And of course, wagering losses, church bingo, raffle tickets, those fun items. Yay! So we're learning a little bit of what we can and what we can't. So, what is the deduction? Alright, so when we talk about contribution, one, cash is easy. Deduction equals to the cash amount. That's the easy one. And we like those because most people do basically donate with cash. Now, with property, it's a little bit different. So it's like if I go to Goodwill, I donate a bunch of housewares and clothes and whatever other knickknacks I don't want. Even though the business actually sells it later on, I do get considered the donation. Well, when we donate that property, the value of our deduction is equal to the fair market value of the property at the time of donation. The only exception that will be is if donated property would have resulted in ordinary income or short-term capital gain. Deduction is equal to property's fair market value less the amount of ordinary income or short-term capital gain that would have resulted if property had been sold. That exception is big and key because I would tell you the art market, a lot of times people do this, is that they would basically find out how much taxes they have and then they'll donate a piece of art and then they slap on the value of that art that's actually worth this amount. So it offsets. Where IRS got a little bit wise to it and they come up with this exception. Now, if the property sale would have produced a long-term capital gain though, deduction is generally equal to the fair market value of property at time of donation. So that's one thing that we have to watch out. Is it short-term or long-term? How long do they have the item that they are deducting? Or basically donating. Now again, exception. If donation is tangible personal property made to an organization that uses the property for a purpose unrelated to the original primary purpose, deduction is equal to the property's fair market value less potential amount of long-term capital gain. So, lots of information. Why not we bring an example? So we got Bay, or B. Be all that you can be in accounting. Anyway, so Bay donates an antique couch to a nonprofit that provides housing items to battered women. The couch costs $2,500, but it's now worth $4,000. How much may Bay deduct for contributions? Would Bay's deduction change if she had donated the couch to an environmental organization? Well, first off, since the couch is being put to use related to the primary purpose, then we take the $4,000. Okay? Fair market value currently of the antique couch is $4,000, so that's the amount of donation that we get. Now, usually fair market value does get calculated by the church or the organization that you donate to. Typically, Goodwill will put $500 for everything that you did. If you get the ticket, make sure you get the ticket that says that you donated. Now, if Bay did donate the couch to an environmental organization, though, the purpose is unrelated. Therefore, she must reduce her deduction by the amount of the long-term capital gain that she would have resulted if the item had been sold. So basically the original value right now. Because the gain would have been 1,500. Again, that's 4,000 minus 2,500. And then you subtract that by the actual fair market value. So usually ends up being the original cost. But we do have to watch out where stuff gets donated. That's why we always ask, if it's property, what kind of property did you donate, and where exactly did you donate it to? Now, here's something that's new, and it's temporary. It's only during COVID. So basically it's for this 2020 tax return. It may come back in 2021 tax year. That will be up to Congress. There currently is no reports if it will. So for 2020, we have an up to $300 above the line deduction, again adjusted for AGI, for cash contribution, charitable contributions. So, deduction is not available if the taxpayer itemizes deductions. Fortunately, that doesn't work. But the $300 maximum applies to all filing statuses. Okay? And the deduction is reported on line 10B of the 2020 Form 1040. So we do have to watch out for this. And again, does not apply to anybody that itemizes. So if they can't itemize, then we're okay. We just put $300 if they actually donated that amount of cash. Now we do also have limits. Because again, it wouldn't be taxes without limits. So generally a deduction for charitable contribution is limited to 50% of the taxpayer's AGI. Now that 50% limit applies to donations to all public charities, all private operation funds, foundations, private non-operating foundations if they distribute the contributions to public charities. Yeah. So mostly you got 50% limitation. Now the TCJA has increased that 50% limitation to 60% for all cash contributions to public charities and other 50% organizations. Non-cash contributions again remain still at the 50%. So 2020 is adding just a little bit of extra twist. So gifts to organizations such as a certain private non-operating foundation, fraternal societies, and veterans organizations are limited to 30% of AGI. For contributions of long-term capital gain property, the contribution limit is 30% if full fair market value property is deducted, and contributions is to a 50% organization. Long-term capital gain, though, is property donated to other than a 50% organization and is subject to 20% AGI limitation. Again, that's your stocks and sales. If it's not going to be donated, then that's will be where we talk about long-term capital gain property. No charitable contribution deduction is allowed for payment to a college or university in exchange for the right to purchase tickets or seating at an athletic event. That tells you a lot how many people actually do that they have to put that provision into the slides, into the book. So, again, payments to a college or university in exchange for tickets is not good. Doesn't get to be donated. So, substantiation rules. Okay. Some extra fun. So, no charitable deduction is allowed for contributions of $250 or more unless written substantiality from the recipient is provided. Okay. No particular form needed for written acknowledgement. Acknowledgement must be obtained on or before date the tax return or the tax year of the contribution is filed. If charity knowingly provides a false written acknowledgement, they can be penalized up to $1,000. Okay, this is basically when you donate to a lot of organizations, they're going to send out a letter with the amount that you have donated and when you have donated it, and that's basically what's getting knocked down. Okay, so we have to have, if we have any charitable donations of $250 or more. Taxpayers donating cash less than $250 must keep a canceled check or written communication from the charity. Taxpayers who itemize deductions should use checks instead of cash for church and similar cash donations. Again, paper trail, IRS loves those. Because again, they do know which items get taken on for fraud. So we need to watch out. Hey, gifts of clothing and household items must be in good condition or better to qualify for a deduction. We can't give an organization just trash. They have to actually be in good working condition. Deductions for a donated vehicle, boat, or plane is limited to the amount for which the charity sells the property. So you would actually have to wait until the charity sells your property before you can claim it on your tax return. Now, charities is required to provide a resale information, and this is going to be on 1098-C, and send that to taxpayers who must attach that form to their tax return for the deduction to be substantiated. Taxpayers may claim the estimated value if I could use a Claritin, but anyway, if charity uses the donated property rather than selling it or donate it to the needy individual. So we have to watch out that also with vehicles and anything else. For quid pro quo contributions. Okay. Again, donations involving receipt of goods or services of more than $75. Charities must provide donors with written disclosures. Again, if you do this for like a local church, they should know to already have place ready to receive the vaccine and the donation and or the auction, stuff like that. Disclosures must provide a good faith estimate of the value of goods and inform donors that only contribution amounts in excess of the value of the goods and services are deductible. So they tell you that, again, that what amount is deductible. A penalty of $10 per contribution per event, capped at $5,000, may be imposed on charities that fail to make required disclosures. So again, if you're thinking about being a non-profit or joining one and you get contributions, just be careful on certain items. Make sure nobody has enough access that they can actually mess with anything for your donations. So another example. This will close out our charitable contributions. So during the current year, Clem donates $1,260 to his synagogue youth group. allow the youth group to use his lake cabin valued at $500, drives 1,000 miles on behalf of the YWCA, guess they couldn't get the license for YMCA, and donates a vehicle value of $950 to Battered Women's Shelter. Shelter sells the automobile for $750 and issues a Form 1098-C to Clem. What is Clem's charitable contribution deduction if his AGI is $33,200? Alright. So still AGI is fine. We're not going to work on that. What we got to do is figure out which one of these count. So, again, we want to bring out the calculator. Let's go ahead and clear it out. And we'll break this down. Now, we know he's donated cash of $1,260 to a synagogue. He also says they use his lake cabin valued at $500. But that does not count for our charitable, because again, that's pretty much providing services or any other item to a non-person, non-charity. So, 1,260, good. Next, he's driving 1,000 miles on behalf of the YWCA. Well, we can take those, but we have to also remember the mileage multiplier. So 1,000 multiplied by 0.14. So we're looking at about 1,400 already. Next, we do know he donates a vehicle for $750. Is when they sold it. Doesn't matter that it's valued at $950. They sold it. There we go. So they sold it for $750. That's the amount that we can actually recognize. So the total deduction is going to be $2,150. And there we go. So again, on the Schedule A, here's where I would put all the interest that we talked about before. And then we have our gifts to charity. So here's all the information where we would put. So if we made any gift of $250 or more, we need to attach the form to say this is where the money went to. Okay, so that concludes this part of Chapter 5. And next one is our last one. It's all about other itemized deductions.